Let's get into it, family. Good morning, everyone. This is Financial Literacy 101, and today we'll be talking about Vonage. I think Vonage will be doing very, very well here in the next 12 months or so, and I think that you guys should get in on this, either be a call option or buy varied numbers of shares. Now, over the course of 5 years, Vonage has been up 145% over the past year. Vonage has been up around 25% 3 months, 4% 1 month, down 3% the past week, up a point and a half, and then today, pre-market, they've been up roughly 0.37%, just rounding up here. Now, if you don't know about Vonage, Vonage engages in the provision of communication services through cloud-connected devices. It operates through the business and consumer segments. The business segment provides cloud-based unified communication as a service solutions, which compromise of integrated voice, text, video, data collaboration. And these are very things to point out because these are all the different sectors that Vonage is in voice, text, and video, and data, and collaboration, also in cloud computing. It also says here in mobile application is scalable, meaning they can always increase because that's the way they built it. Sessions initiated protocol-based voice over internet protocol that's speaking basically over the internet, right? Anything that we're doing over the internet when it comes to voice and or video. The consumer segment offers UCaaS services and features via a single identity. The company was founded by Jeffrey Adam Citron in 2000, okay? They roughly have 2,200 employees, as you can see right here, family. So it's a pretty good sizable company, okay? Good sizable company. Now, this is what I'm mostly impressed with. 13 analysts on Robinhood is saying that this stock is around 62% buy, 38% hold, but 0% sell. That is absolutely phenomenal. And this stock is currently at $14.37. I know that you can afford that. I know that you can invest in that. That is your coffee money for 2 days. That's your lunch money for 1 day. You can absolutely invest and buy some of these stocks, or either be option trading, okay? And we're going to get into option trading after I go through some of these reviews, going over the analytics and the prediction where this could be in the next 6 to 12 months. And we're going to just look at some options, some call options that you guys could possibly get into. Now, as we're over here at Market Watch, ladies and gentlemen, we're just going to look at the year to date, which is up almost 11% at 10.45%. And then over the course of this past year is at 21%. And the analysts are here saying that it's overbought. Okay, they're saying that it's overbought. So we might look at a drawback here. We might see that this stock draws back because we know that the market is starting to trend. It was up consecutively for 5 days. And what I've been reading is that the market may have a slowdown or drawback, not only because of the variant, but also because that it's been doing so well. Rich people have to get richer, and that means they're going to start selling off stocks, which increases the volume, which drives down the actual value of the stock. And when the value of the stock goes down, family, that's when we buy, okay? That is when we buy. Now, the performance outlook over here, Yahoo Finance, saying that short-term, mid-term, long-term, they believe that the stock is going to increase in value and also in profit, okay? Let's see how they're doing on revenue and earnings. Okay, we're gonna look at revenue and earnings. So as I'm looking at how they were doing around 2018, they were doing pretty well 2018. Okay, their earnings was at 35 million and their revenue was at 971. Okay, so meaning they started to turn profit in 2018. 2019, it kind of went the other way at 19.5 million. When it comes to revenue, then of course we know the pandemic pretty much hurt majority of the businesses, okay? Majority of the businesses. I kind of want to do a one-off because believe it or not, Vonage is still in the same space as Zoom. And it says Zoom bets on AI with $14.7 billion deal. And if you guys haven't got in on Zoom when it was less than, $100 and something, let me tell you, because I'm gonna pop up one more screen here because I want to take a quick look at Zoom. Since Vonage is in the same space as Zoom, I think it's important that we look at Vonage because a lot of these stocks that's doing video conferencing, they have the potential to do what Zoom is doing. They can go in and read code. The code cannot be the exact same, okay? But they can do things very, very similar that Zoom is doing. I mean, we look at the G Suite from Google, okay? You got the Google Meet software. You got the Web at Cisco software. You have the Microsoft Teams. All of these are very similar. They do things the same, but they have different software essentially. Okay, it looks a little bit different and acts a little bit different. But I want to show you some of the potential. Now, what Zoom has done that these others haven't really seemed to be good at. Zoom is just Zoom. Does that make sense? Let me show you what I'm talking about. I'm gonna read a little bit about Zoom because I just want to do a compare and contrast, and then we're gonna look at the stock price so you guys understand exactly what I'm talking about. So when we're looking at this family, it says here that Zoom video communication is not like WebEx and Cisco system, where Cisco system is a software slash IT slash all of these other sorts of technologies. Okay, it's a technology company. Now Zoom is a technology company too, but its base is video communications. And that's what they've been solely doing, and they're doing very, very well. It says that engaging in the provision of video first communication platform, the firm offers meeting, chat rooms, and workspaces, phone system, video webinars, marketplace, and developer platform product. It serves the education, finance, government, and healthcare industry. Its platform helps people to connect through voice chat, content sharing, and face-to-face video experiences. Okay, so that's what they're into. So they're doing very, very well in this particular space. Let me tell you, Zoom is doing very, very well. And if Vonage can do anything similar to what Zoom is doing, then they'll be, I won't say just as profitable, but they can be very, very close. And what's important is when I look at Google Meet, I look at Microsoft Teams, they are large conglomerate companies, meaning they have consumed all other sorts of businesses. They're in all these other avenues of e-commerce, products, manufacturing, distribution, where Zoom is Zoom. And let me show you, Zoom is doing very, very well, okay? Zoom is doing very, very well. Their stock is $367 per share. And when we look at this family, look at this. They haven't even been out 5 years. When they first came out, beat yourself across your head right now. Because in 2019, they came out in April at $36 a share. Zoom has made many people millionaires if they would invest it. And so again, I like to do the compare and contrast so you can see a very, very large, significant, and I can't promise you that Vonage will end up here where Zoom has done, because Zoom has done a very trend-setting trajectory of where their business is going, but they've done some very innovative things with their technology and their platform. So take, for instance, they're $36 in 2019. Last year, they went up 45%, but over the course of 5 years, they've been up 919%, okay? 919% in the course of 2 years. In the course of 2 years, we're in 2021, we're in July. This is April of 2019. So roughly 2 years, they've been up 919%. The past 3 months, they've been up 11%. The past month, they've been down almost 4%. The past week, up 3%. And then today, they're slightly down. But again, we're not so much talking about Zoom and you going investing in Zoom. No. We're talking about the potential of Vonage. And that Vonage, if they follow some of the same things that Zoom is doing, they can be up over 100, 200. And Vonage right now is only $14.37. So you see what I'm getting at here. We have to be very careful how we compare stocks, for one. I just don't want to compare every stock against the most popular stock. What I want to do is show you the potential. And then also here, what we're looking at is how Zoom is now investing $14.7 billion bill to acquire Five9, okay? Which is an AI, artificial intelligence company, okay? So I just want to bring that to your awareness. Let's move on. Now, when I'm looking at Vonage, and of course we got to do this. I don't want to, no thanks. Here we go. I just wanted to go onto their website here and look at just some of the options that they have. From bottom to top, I like to do things a little different sometimes. Visual voicemail, okay, same thing as Zoom. Call groups, call recording on demand, same as Zoom. CRM integration, same as Zoom. Chat and file sharing up to 100 participants, same as Zoom. Video conferencing up to 100 participants, same as Zoom. Team messaging, you get where I'm getting at. Mobile app, same as Zoom. Unlimited SMS and unlimited calling. So they have a lot of similarities that's adjacent with Zoom, but the only similarity that they don't have, because we understand when Zoom first came out in April of 2019 was worth $36 a share, which is a little more pricey at this. This one's at $14.37 pre-market here, but when I'm looking at the trajectory over the next, let's take for instance the next 12 months, we're looking at a high of $20. Now I'm trying to figure out, and I've been looking at their backdoor financials, meaning the things you really have to go search for, is that they're moving very slow. And a lot of times I tell you this, do you think if you have two groups of people, and hope this is a great example. You have two groups of people and they're both under some sort of deadline. But you have a group of people who has 6 months to build a house, and you have a group of people 3 months to build a house. More times than not, from my experience, is that people who have a shorter deadline, they make shortcuts. You get what I'm trying to say? We have a shorter deadline. We have to do things very, very quickly. But in order to meet this goal, in order to meet this deadline, we have to take shortcuts. That doesn't mean that it won't be a good product, but anytime you make shortcuts, there's a lot of things that can go haywire. There's a lot of things that go wrong. We're talking about safety, material, build quality, etc. Okay, I'm using this analogy when we talk about building a house. But if I got 6 months, I can get the right personnel. If I got 3 months, I got to get personnel who just know how to do it. Not the best, okay, not experts in the field. So let's get the right personnel. Let's get the right materials. Let's get the right designs, because we have 2 to 3 months to actually plan everything appropriately versus we got 2 or 3 weeks and then we have to start building. That's kind of where I'm taking that. And so I like what Vonage is doing. And I do believe that this could be possibly a good buy for you guys, okay? But of course, any information I give you here on Financial Literacy 101, take it with a grain of salt. So let's move over to, let's look at some options trade that could be possible in case you guys don't want to go in and buy a couple of stocks, 10, 20, 30, 100, however you see fit, okay? All right, and I did something wrong here. We should be looking at Robinhood. Give me a second, family. There we go. All right. So I'm going to go over here to trading options. And again, if you guys are not familiar with the Robinhood platform, you want to get into investing, I have a link in the description below. Also, if you like this video, please give it a thumbs up, family, so we can bring other people into this great information of investing. Please give it a thumbs up, like and share on Facebook, and share also on YouTube to your other social media platforms. All right, with that said, when I'm looking at the options right here for Vonage, VG is the ticker. And as I'm looking across, I'm going to make sure that it's buy, not sell, because I'm banking on Vonage going up. Buy, not sell. And I want to do a call option. Now, I want this to be anywhere from 6 months to a year. I do not want to do a short option. So since we're in July, January could possibly be good, but March would even be better, okay? So I'm looking at March. And of course, the longer you go of an expiration date of any option, whether it be a call or a put, call means that your option is going up. You're banking on the stock price going up. Puts, are you banking on the stock price going down? Now, anytime you see the number in the price column here, as you can see that this particular option, the strike price is at $15. The break-even price is at $16. And then the price of this particular auction is $1.68. But what that's going to round up to be, ladies and gentlemen, is a whopping, $170. They kind of rounded up on this one, which is not a lot of money for an option, especially we have this option out to win March 18th 2022. March 18th, 2022. Now, the further you go down, because Vonage is already over $14, these options get more expensive. So anytime you see, take for instance, you see $1.68, this always say 100. And if you see double digits, then we know that's thousands, okay? Let me give you an example. Let's see if they have it up here. Nope, that's just gonna be $248, okay? And the reason why you're saying that is because how many contracts I have here? I have more than one contract. Let me go back here. Let me get rid of one of these so I can give you, there we go. Okay, so $250, they rounded up to the nearest 10th. And we see that because of this option, any number you see here represents the hundreds after the decimal point, and this was double digit, that will be 2,000 and some odd dollars, if that makes any sense, okay? But I don't think you really need to go out to 2023. You can come out here to June. You'll be paying around, wow, they're expecting this to really go up in June. Because if you can tell here, let me go back and erase this one option so you see what I'm talking about here. This option is going to be about $320, okay? $320. And here we go, $320 for this option over here to your far right. Wow, that's interesting. So that means they have really good financials for that particular time. If I wanted to buy option, I probably would go right around the $15 mark. Let me see the implied volatility here. The implied volatility is 44%. That's really low. That's not good at that. That's not good at all, family. See, the implied volatility is a analytical tool that gives stock investors financial information of the chances of them turning profit. And what I like to look for is an implied volatility usually over 90%. So this is at 44%. I would not advise going into that option at 168. Let me see if there's any option I will actually support. Okay, so yeah, this is conflicting information here. And I'm going to have to do a little bit more research because they have this at $330 for this $12 option because we're already at $14 per share, but the implied volatility is at $47.98. Yeah, we're still sitting on Rocky Financials, okay? Rocky Financials should be an actual investing group. Yeah, a bunch of these call options here, family, is in the 40 percentile. I keep looking at the implied volatility. I am not too sold on the call options right now. I think you probably be, when I'm looking at this once again, you're probably better off investing inside of a put option, meaning that the stock going down. And for you guys who are not familiar with implied volatility, I'm just going to give you the quick definition of this. And this is going to come from Investopedia, okay? This is going to come from Investopedia. So let me show you this very quickly. We'll get out of here for today. As you can tell right here, it says that implied volatility is the market's forecast of a likely movement in a security price, the likely movement in a securities price, a stock price. It is a metric used by investors to estimate future fluctuations, volatility of a security price based on certain predictive factors. Decreases when the market is bullish, listen to that, decreases when the market is bullish, and investors believe that the price will rise over time, okay? Will rise over time. And over here, this is from Wikipedia, that was from Investopedia, and Financial Mathematics, the implied volatility of an option contract, I like this one. It actually mentions option contract, is the value of the volatility of the underlying instrument which, when input in an option pricing model, will return a theoretical value equal to the current market price of said options. Now, when it comes to that, this is not an exact science. If you notice that they use words like prediction tool, okay, forecasting tool. So nothing is exact in the investment market. It's almost like saying, well, if you get all A's on your test, you'll be a great engineer. No, you might be a horrible engineer, but at least you may be an engineer. Hopefully that makes some sense to somebody. But anyway, I still believe that this stock would do well. I think I'm going to go in and do a little more research on the call options and see what's probably the most valuable. I may create a post later on and show you, I believe that this one will turn out more profitable than the others. This is Financial Literacy 101. Learn money and be inspired. And I'm looking at Zoom, but I'm also thinking about investing in Vonage. You might want to get into this and look for that post that I may create to show you what I believe which may be the more valuable and more profitable option. I'm out.